Hello everybody, welcome to your weekend edition. It is Friday, a nice cheers, shout out. Hope you're enjoying a nice frosty beverage. We're going with, I forget the Colonel something, straight Kentucky bourbon today. It's one of those types of weeks. A good one, top shelf whiskey. Hope you all had a top shelf kind of day. Hello out to Les, Thomasina, Sue, MTB Man. Good to have you with us from Tejas. Tom, Big Kev, we've got Dana Siraj as well, so good to have everybody with us. It should be a fun show today. Again, I'm going to keep it to pretty much all listener questions, so whatever you guys have, send them on in. Luckily for me, you guys were pretty active last night, which is great because you sent in a bunch of questions to get me started, so I will do my best to get through all those. All right, Sam, good to have you. Good to see you made it on time finally. All right, here's our topic to join. Again, for those who might be new, you can click that subscribe button. That always helps me out. And you can also, if you have a question directly to me, in the chat, you can type in a couple question marks before it so I know they're coming straight to me. Otherwise, I'll just assume it's chat for the group out there. So anyway, happy to have everybody with us. Let's get rolling. So here's our trading week wrap up. There was some stuff out there that to me kind of just made it feel more bubble-licious as we had our event last Friday with the symposium talking about the everything bubble. It just seemed like this week we started getting a little bit more bubble-licious. So I thought I'd have fun with this little graphic here as we see things kind of inflating even more. Now, I have a ton of questions, like I say, but there aren't in any real particular order or category, so I'm going to kind of bounce all over the place. I'm going to start with this one from Don. Not a stock I typically look at, but I can certainly analyze it. Don says, where would you buy in on CAT? That's Caterpillar. Says looks tempting. All right, we'll start things off with a look at Caterpillar. And what I'm also going to do on today's show, and I'll probably do it near the end, is I'm going to do a market overview, see where we stand with the top 7 markets we normally look at, which is the 3 indexes, gold. We'll also get crude oil as well as the bond market, which has been very interesting lately. So just to give you a heads up and maybe incentive to stick around and watch the whole show today. So what do I think about Caterpillar? Well, take a peek at CAT. CAT has been getting just torn apart here recently, and this is why I think it's so important that we always start off by looking at things from multiple time frames. Because if you look at this picture here, you're thinking, my goodness, Caterpillar is just getting murdered. I mean, huge volume today, 8.6 million versus its average of 2.8, so a lot of negativity pouring into it for whatever reason. I'm not even going to look at fundamentals or the news on it. Let's just look at the price chart. So as I look at this, it is actually fairly attractive, Don, and I guess it all depends on what your thoughts are on it. That this trend's going to continue to the upside and you're looking to buy a pullback, great. For me, I like actually selling puts on things and trying to collect some premium without taking too much risk, but that's just a different approach. Now, before we look at the daily and say, hey, let's plan out some trades here and think about potentially buying Caterpillar, let's just go look at that weekly chart. That spells a very different picture in my opinion. I mean, this is an incredibly powerful run that we've seen. I'll also go out and look at the monthly to maybe even see the big picture. And as we can see, Caterpillar over the past, how many years I got here? Almost 20 years has just been doing phenomenal, and it's all-time highs right now. What's noteworthy to me, though, is how you get these big, nice rallies followed by some prolonged sell-offs and then big, powerful surges. And look what happened back on a monthly time frame on Caterpillar, starting on, for those that are listening to the podcast, you have to get your own charts. If you go back to April of 2017, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 months in a row where Caterpillar did nothing but go up. Caterpillar just kept on going up and up and up and up and up. Great. If you look what happened, and then it sold off for about 2 years, right? If you look what started on April, we talked to the first one was April 2017. Now we're looking at April 2020. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months in a row before you even had one red candle. So a very similar picture to what we saw back in 2017. This one's even more exaggerated as it's gone from right around 100 to a peak that we achieved this month right around 246. All right, so now that I have this big picture in place, it makes my sentiment change just a little bit. While I do look at the picture and I love what's going on with Caterpillar, it looks really strong, it's starting to feel like this pattern could repeat, and all of a sudden we're going to get some weakness in it. So I'll go back down to that daily, and if you are thinking about going short this one, and I see we got Cruz in here saying I would go short Caterpillar when it gets up to 237, 240. I kind of agree with him. I think, Cruz, I think you're right. I actually would look at this because right now what I'm seeing with this 5 big red candles here. We've got 5 big red candles out of the last 6 days of trading for Caterpillar. And notice that they're expanded range. They're really large, extended candles with high volume. That's telling me that sentiment has changed on Caterpillar here, and you might be looking at a prolonged downtrend. So I don't know if I would necessarily feel very comfortable buying this pullback. And I know it kind of flies in the face of what I talk about so often here, which is, look, if you are in something and it's trending up, your odds are better going long during that uptrend. Yes, I would say 95% of the time that's going to be true. For me, I'm looking at it from the perspective of it's already been on an unbelievable run, especially when we stack up those moves on Caterpillar going back the last 20 years. There's only really 2 moves that look like this, and that one happened in 2017 versus today. So I'm almost getting the feeling like we're overdone on Caterpillar just based off the price charts. It looks fairly weak, especially what's happened here. I would be inclined to look for shorting opportunities if it bounces back up into that 240 range. I think it's probably a safer bet. Yes, I know it's counter trend, but that to me it feels like where it's going to be headed. Of course, it's all risk management and stop losses anyway. Now, I see another one here. Yes, CAT just below 200 looks good too. So I'll put a line at 200. I think I might have snap mode on here, so it's going to take me just a second to dial these things in. Here's Caterpillar at 200. Yeah, you obviously have a demand zone there as well, right around 200. You know, the thing for me, if you're looking at 200, you could right now be selling those puts, and you don't have to necessarily do them on monthlies. Sometimes these options may have weeklies as well. I haven't looked at Caterpillar, but I can here in a second. I'll bring that one up. Why not? Let's see if my system can handle the massive influx of data that this Option Station Pro uses. It uses tons of data here, but you could be selling those 200 puts if you were comfortable going at a lower price on Caterpillar and potentially being exercised, but all depends on the amount of premium that comes along with that. So let me bring up the Caterpillar options here. Yes, markets are closed, so it's not going to be the most accurate prices, and it's hard to see. But I'm going to go to where we are right now. We're at 220. Yeah, you wouldn't be collecting much premium. This is obviously the week for next week, so there are weeklies on this. You're looking at 6 days out. You'd only be collecting, a small little 12 cents per option. That's not much at all. But do you think it's going to get down there by next Friday? I mean, you could look at that as almost being free money. I hate to use that word. It sounds like it's risk-free. It's not. Certainly, you've seen it this week fall. Let me see how many points this has fallen in total from its peak there this week. We went from there all the way down about 10%. It's fallen 10% this week. If it fell another 10%, yeah, you might get exercised on this one and be down around 195 on Caterpillar if it fell roughly the same amount. So, it's a risk you got to take here with Caterpillar. Bottom line for Don, it does look tempting to buy it because of this picture here. But when you zoom out and I look at that weekly or monthly, it doesn't make me feel as comfortable buying this pullback. All right. Yes, and Tom says it looks like the infrastructure buzz has gone away, which hurt CAT. Yeah, remember during the elections there was a lot of talk from both sides saying, "Oh, infrastructure," and now that we've got an infrastructure bill, you can see that price chart obviously reflecting the prospects of tons of money pouring into big projects. Well, that may have fizzled out, and now it's just going to move on to the next best thing. This is all-time highs for Caterpillar by a long shot. So, yeah, I don't know. I'm not very bullish on it. This weekly candle is damn ugly, too. You notice it's the biggest candle on this screen, up or down. That's a pretty bad week for Caterpillar. So, Don, I have to put myself in the I'm not really that excited about buying this dip on Caterpillar. Even though it looks like a big discount, it still looks risky to me. Okay, what else do I got? What am I drinking today? I forgot the name. A Colonel Taylor. I'm drinking Colonel Taylor. The rest of the groups, they're not drinking today. It's just me, so there we go. Okay. Ooh, that's so strong. Colonel Taylor is pretty good. Got a little wallop to him. Sarah, I'm not sure if I pronounce it properly. It's all right. I have IBM in my retirement account. Jim Cramer was talking about it's splitting. What does that mean? What do I need to do? Yes, IBM recently, I think it was April, was talking about them doing a split. And basically it's not necessarily a split, it's a spinoff. It's very similar to what Connexent Technologies did years ago. They spun off Skyworks, and a lot of companies will do that. And what ends up happening is you'll retain your shares of IBM. They're probably going to drop in value, and it'll freak you out, right? You're going to look at your IBM shares and be like, oh no, yesterday I was trading IBM, it was at 150, and now it's at 100. What the heck happened? you'll get that same amount of value, but in the shares of the new company. And I didn't see anything that said exactly what those, Colonel Taylor. I didn't see any numbers exactly on what that split was going to be. From my understanding, IBM will retain the lion's share. That's really the cloud computing piece, which is roughly $60 billion. And then the second one, which I believe the name, I had to write it down, Kyndryl, Kyndryl will be the name of the new company. And that's going to be focusing on infrastructure and services, which is roughly $15 billion. So, you can kind of proportionally figure out what that breakup is going to be. But ultimately, it will maintain roughly the same share price when you combine the two on the day of the split. What does it mean for you going forward, Sarah? What do you need to do? You don't really need to do anything. If you're keeping your shares at a brokerage firm, they handle all the splits. It'll take a couple days for those shares to show up in your account. One thing I have learned over the years, in having been executed on a few of these where I've owned a company and they've spun off a different company out of it, is over time, this is just from personal experience. Over time, it seems to me like keeping those shares is usually pretty good, because I feel like there's a business decision that says we can make more money as a company if we split these two things apart. So when Connexton spun off Skyworks, for the longest time, Skyworks was struggling and didn't really do very well. And then all of a sudden, Skyworks just took off. And I don't know if the company would have made the same amount of, the share price would have done the same thing if it stayed as one company as opposed to splitting into two. So now you have two separate companies to work with and hopefully grow your investments. And I don't know, Sarah, what your initial thought was there on IBM, why you put it in your portfolio, but they're still one of the bellwethers out there and will probably continue to be. Did I get it? I hope I didn't lose you guys. All of a sudden, my thing said I lost connection here, so I think I'm back. Watch Merlin, not Kramer. You know what? It's funny. I actually I'm working on some sound effects pieces here just to make the show more fun. I just don't want to come across like Jim Kramer, because I know he uses sound effects a lot, but they can be very entertaining to have on the show. But maybe I'll incorporate some sound effects for the program, ones that I like. All right, so Sarah, from a technical perspective, though, you look at IBM. Again, this is very similar to what we just looked at. They look great. It's just continuing to trend up. This is your daily time frame. We'll go bigger, go to a weekly, and you can see the struggles that they've had. Obviously, they suffered the same big old drop that we saw in 2020 with just about everybody, but they've really recouped pretty handily. We're right back at the peak of where it was back in 2020, so looking pretty good. If I look at the monthly time frame here, look even bigger. It kind of paints a different picture, and maybe this is part of the reason they're getting that spinoff, is to get new lifeblood. Maybe they feel like that's going to be one of the most profitable areas, is this new company they're going to call Kyndryl. Who knows the reason for the split? I'm sure we could all read into their literature and see why. I just don't want to waste my time with that. Going back to 2012, though, IBM really doesn't look good. I hate to say it. It's been drifting down, lower highs, lower lows. This is a nice positive sign we've seen for the past 3 months or 4 months in IBM, but all in all, this doesn't really impress me as far as being a long-term hold when you see a chart that looks like that. If anything, you're buying it now to hopefully get some of the spin-off, which will happen here sometime soon. It hasn't really, they haven't said when this is officially going to happen, it should happen by the end of this year. Okay, let's see. Can you look at TSM? Some questions on CAD. I want to buy it. Selling puts. Okay, let's go. So TSM. All right, Taiwan Semiconductor, monthly. Hallelujah. Hope you bought it at 20, right? It's one of those phenomenal ones. And again, I think this is reap the rewards of the big chip shortage. But Taiwan Semiconductor looks great. Right now, it actually looks pretty bad because these last 4 months, the way they've shaped up. But let's go back to the weekly here. Slowly drifting down, even though it looks amazing since, well, everything else in this chart to the left of 2021 looks amazing. To the right of 2021 looks pretty weak and slowly drifting down. D for the daily. Doesn't look great. So Ketut in Indonesia, good to have you with us today. You want to buy it and selling puts. Okay. So if you're looking at buying Taiwan Semiconductor, you kind of have to be careful of that bigger time frame. So here's your weekly, right? So for me, there's a couple lines in the sand where you got to be respectful of it, and that's going to be right on 108. And then after, I think if you get below, call it 103, you could be in some deep doo-doo with regards to prices falling. I mean, there's an unfilled gap that goes all the way back into July, down around $78. So that's a long ways away. It does look weak right now. Yes, it has formed a little bit of a double bottom. You can see it's bounced twice here at that 107.90 mark. Actually, it's bounced 3 times on a weekly chart. but it's not making new highs. So I'd be a little apprehensive on going all in bullish, although it has stabilized. So how could you sell puts on this one? Katut says she wants to buy it and selling puts. Well, you go out there and you could sell those 110s. I'm not sure what the strike price would be, but you could sell the 110s, which would put you here, or you could probably sell the 105s and put you more towards that lower demand zone and collect premium. And if it gets there, great. If not, you collect premium that entire time. I am a big fan of collecting premium. It's a great thing to do. So that's how I would look at this, Katut. It's doesn't look great right now, although we do see, again, since March, kind of a range-bound price action for Taiwan Semiconductor, which may present some opportunities for you. Yeah, 110? Yeah, sure. Let's see. I don't know, see if I can get up those options here. We'll go TSM. Just curious myself what those might be, the 110s. And if you're selling, you want to do, obviously the shorter term. So let's just say you're going to go out to the monthly, which is, it's unfortunate it's only 6 days away. It's not really going to do you much good, but let's see. If you want 6 days worth of premium at 110, you would be collecting 12 cents. So, $12 per option that you sold. Not that great. If you go out another month and go out to, let's say, your July 21st or July 16th, excuse me, and you're the 110s, you'd be getting $1.12. So the premium's not really that great on IBM. Again, remember IBM is TSM. It's not the biggest mover with regards to its average daily range, but still there's some opportunity there. You said thinking maybe the hundreds. Well, you could do the hundreds. You're going to get less premium, but you would have also have passed below this demand zone. I would probably go to those 105s. I think the 105 would be probably the number I would go to just for the amount of premium you're getting. All right, what else do I got? That was from Sarah. And there's a lot of questions on inflation. Clearly, with the news we saw this week with CPI, they expected it to come out at 0.5%, or 0.5%. That's coming off of a 0.9 reading the month before. We came out at 0.7, which clearly shows the consumer price index, or CPI, is higher than expected. Now, obviously, next week, I believe it's Tuesday, we have another announcement with regards to PPI, which is Producer Price Index, which is critical. Because remember, the consumers buy what the producers make. So if we're seeing the producers' numbers rise and show more inflation, then we know that the next month's reading of CPI is going to be even higher. So that is coming up here next week with the PPI number. I'll let you know, obviously, during next week's show when that exactly can happen. But a lot of inflation questions, and of course, I deserve a sip of Colonel Taylor whiskey. Okay, so Pepe says this one here. Is high inflation like the one we are seeing now good for national debt? That's really, like you say, you got a John O'Donnell question here. It says, I remember in 2018 that John O'Donnell said on the OTA show, hyperinflation is the only way to pay your national debt. I'm going to go out on this and say there is, in my opinion, no way we can pay our national debt other than default on the U.S. dollar. I don't think that there's a mathematical equation you could possibly come up with that would pay down our national debt even with some sort of hyperinflation. However, I'm going to bring John O'Donnell to tackle that one, Pepe. I do want to get to this piece here, which talks about inflation. So I am in the camp. I know we've got others here that believe that inflation is knocking on our door. It's going to be becoming much more of a factor impacting our market. So how do you play it? How do you protect yourself against inflation? Remember, there's this sequence of events that happen, right, to when we get to an inflationary environment. Number one is it's caused by generally having a lot of money created, money coming into the economy. That is what the Fed has been doing with all this stimulus, right? So we're seeing, and the Treasury Department is doing a stimulus as well as the Fed. It's also fueled by extremely low rates. So we've got two of those boxes checked. It's also fueled by consumer spending. Well, we went through this period of contraction on spending, and now all of a sudden we're seeing an explosion in spending. So you have this trifecta of factors which could lead to very high, very quick spikes in inflation. To combat that, the Fed has to do what? There's really three things that can happen that the Fed and our governments can do to help stop rising inflation. Number one is they can look at the Fed funds rate, which right now is at 25 basis points. Next week, we have an announcement on that, where it's expected right now to stay just about the same, at less than 25 basis points. To combat inflation, they start to raise rates because what they're trying to do is make money more expensive, right? They're trying to slow down spending. Can you see the double-edged sword here? Right now, we're saying we need spending to get our economy back on track, but if inflation is there, we have to cut spending, and they're walking this fine line right now, which I'll tell you what, I would not want to be Powell or Yellen or Biden. I wouldn't want to be any political official right now, to be honest. So first thing they can do is raise that Fed funds rate. That's a dangerous thing to do because then you really start to choke the economy. The next thing you can do is you can decrease the money supply. You take dollars out of the economy, therefore there's less money to be spent, if that makes sense. Do you think they're going to do that? I mean, they're just talking about putting $6 trillion in the market. So we're going the opposite direction. We're basically doing everything that should fuel, theoretically, inflation. And the steps we need to do to stop inflation would be contra everything that they've just done. The last piece, which I think is probably the one that they will start with, which is very interesting to me, is the reserve requirements for banks. Reserve requirements for banks are basically the amount of money that bank has to hold of your deposit. So if I deposit $10,000, they're required to keep a percentage of that for me, and then they can lend out the rest. So let's say it's 10%. If I deposit 10 grand, they have to keep $1,000. They can lend out $9,000, and that's how banks make their money. It's called fractional reserve banking. However, the reserve requirement for right now, if my reading is correct, I was checking this one a couple days ago, right now the reserve requirement has been dropped to 0. Meaning that there is no reserve requirements, which should scare everybody here. That means the banks don't technically have to keep any of your money on hand. They can lend it out. The thinking by the central bank and the Fed was that this would fuel our markets. This would be that kickstart, that catalyst that vaults our markets back to prosperity, which in theory is good. But boy, I tell you what, when you have unlimited margin, and that's essentially what they're giving banks, they can lend out as much as they want of the capital deposits, that gets a little bit scary. With regards to over leveraging. Haven't seen it be a problem yet, but it could be. So if we have inflation rising, which I believe it is, so bank puts, yeah. I don't know, man. You remember banks rule the world, so you're betting against the banks is a dangerous thing to do. I'm not buying puts on the banks. So Miles' initial question was this. He says, how do you feel about tips to hedge against inflation? I love it. I think it's a great idea. So if you feel that the interest rate markets are going to be rising and you're going to see the Fed raise rates to try to fight inflation, and basically you have to look at it with the forecast of a year or 2 or 3 down the road, then yes, tips are great. For those that don't know what they are, they're Treasury inflation protected, I forget what the last word is, but I think it's securities. And basically what it is, it's a bond product that will reevaluate the yield on that bond based off of the prevailing interest rate. So if interest rates keep rising, let's say right now it's at 0.25%, well, those tips aren't going to yield you very much, right? But if all of a sudden the interest rates rise from 0.25 to let's say 5%, and you bought a bond at let's say 1%, you're locked in, and now the market's paying 5%. You'd be losing money there. It's not good. So what you could do is have a tip which would automatically recalibrate. I don't know exactly when they recalibrate. I think I'm not even going to say what I think it is because I'm not sure. It will recalibrate and be locking in at higher rates. Tips work great for a long-term investment portfolio if you are in a rising rate environment. If you're in a dropping rate environment, you don't want to be using tips. To that end, what market are we in? We've been in an aggressively rising rate environment, but tell you what, how to buy tips? You go to the government. I forget exactly the address, but you can go to the Treasury. You can buy tips directly from the Treasury. Let me see. I think it's treasury.gov. Treasury, SURY.gov. I believe this is it. Let me see. I think you can actually buy it right at the front site of the. Now there's something like Bonds Direct. I don't buy bonds because to me the yields just don't match up, but I know a lot of people do. So let me see. There you go. We'll just type in buying tips. You can certainly buy them. There it is, treasurydirect.gov. I knew I was somewhat close. If you go to treasurydirect.gov, you can go in here and you see it's just buy tips right there. So you have to open an account and you buy directly from them. So it's actually very easy to do. There was a video at OT Academy that Bill Addis did talking about tips. I got the chance to interview Bill Addis about this a while back. I'll see if I can find that one for you. It was a great video. Obviously, Bill Addis, one of the go-to sources for me on anything to do with bonds. But that's where you would buy it, Alan, is at Treasury Direct. If you go to your broker, you can probably get them there as well, but it might be let's just say a little bit marked up. That's is typical with these guys. So from Miles, I love tips from a perspective of hedging against inflation. I'm much more of an active trader and way more on top of my money than most people, so I'm not really a big bond person, period. However, if you are a little bit more of a passive investor and you don't want to be looking at the markets every day as I do, then bonds become a great thing. And not only using tips as an inflation hedge, but also creating different structures. For example, there's things called bond ladders, there's things called bond barbells, which are designed to get you a predictable or more predictable rate of return on your portfolio that will adjust with fluctuations in markets. And those are a couple of resources you can be using as well if you are thinking about, let's say you're nearing retirement and you're looking to generate some income streams. That's a great thing to do with bonds. All right, what else do I have out here? So the inflation piece, which Pepe started, he wanted to know more about paying down the national debt with that one. This is a long-winded one. I'll try to paraphrase it here because this is a confusing piece for a lot of people. Kevin, thank you for the question and support, by the way, Kevin. He says, why is it said that higher inflation means a stronger dollar? I understand that with higher inflation, more dollars are needed to purchase items, but using consumer logic, if it costs more dollars to purchase items, wouldn't that mean that items are overpriced, therefore less people would be interested in paying those prices, therefore global investors prefer to purchase items in other currencies, such as the dollar loses interest and value. Okay, so before I get too long-winded here, here's the interesting part about this. When we look back at that cycle, and I wish I had a graphic designer to help build out some graphics for me here, but I don't. You look at the solutions that the Fed has to, so let's assume that right now, I believe we're starting to see an inflationary environment, but let's say we're a year down the road and inflation is like, wow, everybody's talking about how inflated things are. I could talk about I just went shopping today and I was like, holy cow, everything's so expensive, so much more expensive what I bought now versus a year ago. It's not like they've added a dime or something to it. I'm seeing like $1 added to a lot of items. Like, wait, wow, I know the price. I got memory. So when we look at the solution, okay, how does the Fed slow down inflation? First thing that they're going to do is start to raise the Fed funds rate. Basically what that will do is start to push that yield curve up, making money more expensive. Right? So when the money gets more expensive, let's just say we go from, let me bring up the 10-year chart because I want you guys to see where we are at right now with the 10-year, just to create the story visually. Here is the 10-year yield. Okay, so we've had a pretty nice slide. It's at 1.457 right now. But let's say we took a step back. We look at this on a weekly time frame. I'll change it out to a weekly. And we rallied back up and we broke this, and all of a sudden we find ourselves up in this 3% range. Now all of a sudden what will happen is that Fed funds rate is going to be pushing this even higher. So if the Fed funds rate goes from 25 basis points to 1 point, what that means is anybody holding US dollars, if they're holding another currency, for holding US dollars, they'd be getting 1%. Now they could go into another currency, do what's called a carry trade, and do again something like the Japanese yen, which is negative 0.1%. And now holding the US dollar Japanese yen, you could be making 1.1% simply for holding the US dollar. So the higher the rates get, the more desirable it is for people to be holding US dollars. So more people are going to do what? They're going to buy US dollars because now the carry trade makes them money simply for holding US dollars, if that makes sense. So, Kevin, that's one of the reasons that you see that dollar gain strength. In an inflationary environment, rates are going to rise. Demand is going to pick up for the US dollar because you're going to make more money by holding dollars versus something like the Japanese yen. So if you live in Japan, you're going to sell your yen, go long US dollar, and you're going to make 1.1%. And if that rate gets even higher, it might be 2, 3, 4% by the time all things peak out. Who knows what the ultimate end thing is here. That's one of the main reasons you see inflation leading to a stronger dollar. Not necessarily permanently, but in the short term. And remember, the other pieces that happen here is you have rising interest rates, which in theory would push the value of the dollar up because people want to hold dollars. The second side of this would be that, remember, the one other solution is to remove money supply from the economy. So let's say Treasury says, hey, we are going to remove money supply. We're going to drop M1 money supply in the U.S. So now all of a sudden, if you take simple supply and demand mechanism, which is people are buying U.S. dollars because the U.S. dollars are yielding more money to hold, then all of a sudden you're taking dollars out of the equation, so you have all this money chasing fewer dollars, the dollar will move up even faster, right? It's all supply and demand. So if then you add in the fact that the reserve requirements could raise from 0 right now to, let's say, 5%, that's more money out of the economy. So you have money supply dropping, demand increasing. That's why you tend to get those real big spikes up in the dollar. But again, that's only going to be short term, right? By removing money supply, you essentially add strength and value to the US dollar, and then global demand picks up because the yields are rising. I hope I didn't lose everybody on that one. It's a tough one. It's a tricky kind of open up the watch mentality where you look and there's so many different moving parts there. But if you just kind of think logically about the impact of this action, what's going to happen, what are the next steps to follow that action, it makes it a little bit easier to understand. That tweet from Warner CPI up. Oh, I didn't see that one, Katit. I didn't look at Warner's Warner's tweet today. I can't even talk. All right, what else do I got for you guys? I have one more question. I put this one in here. I really am not, I'm not that talkative about trades that I do. I feel jinxed a lot of times by bringing up trades. I talk about setups all the time, and I'll definitely tell you guys everything I'm in. Riley said, can you talk about what puts you are selling on AMC? What I'm doing there is very risky, guys. It's extremely risky given the volatility with AMC and meme stocks. However, there is opportunity there. I mean, the premiums that you can get paid are very high. So I forgot what I did on last week. I sold on Thursday, and I was going to cover it on Friday, but it ended up exercising. I'm like, okay, and I sold the shares on Monday when we opened up. What I was doing with AMC is I'm really just looking way out of the money and seeing what kind of premium could I get. And I'll bring up the AMC chart here just so you guys can get an idea, because I did sell some today. I sold the 30s. I sold a bunch of 30s, actually. If you look here on the weekly, I actually go to the daily. I think daily is going to be a little bit better for you guys, just so we can see the volatile swings. I sold the dailies, the next Friday's options on AMC. And I would sold the 30s, which is right here where my cursor is, right? That's a long ways away. If you saw the premium that was being paid to sell the 30s, and basically for those who don't know what I was doing, is I sold the 30s, which basically means that if AMC gets down below and closes below 30 by next Friday, then I'm going to be a holder of AMC shares. I don't think it will, but it could. It could certainly do that. In order to get that, my premium, oh God, I don't even have the page up here. It was like, I think I got $1.60. So I was almost over 3%. It was almost 4% for a 1 week trade on this. So to me, that's worth the risk. I don't see it getting down to 30, although, I mean, anything can happen, and certainly the craziness of this stock. But the way these guys keep popping it with these meme stocks, like, all right, if it gets down below 30, I'm actually going to be buying it at less, because if I get exercised at 30, my average price in this would be $28.40. So, I'm down even further. I don't want to own AMC. I think it's a garbage company. It's just overly popped up. But the amount of premium that they're paying, again, that'd be roughly 4% for 7 days. That's not even for a month. I could do, and I looked at the monthlies. I could have done better, but I don't want to commit myself to that much time. I generally was doing like 1 day types of options with AMC on the weeklies, but this is the first one I've really stretched out to a week because the premium was just so damn good. But that's what I'm looking at, Riley, and to me, it's a very dangerous play. I don't really encourage everyone to be doing this unless they are very on top of their trades and have good discipline, because you get caught on the wrong side of these things, and let's say AMC gaps down to like $20 on next week at some point. Yeah, then you're in a world of hurt, and you got to manage that position. You start selling calls on that and covered calls, or how do you manage that? But that's what I've been doing, and I just don't do it with just AMC. I do it with a lot of different companies. I look out. Brendan spam. Brendan, hey, he's a Bitcoin lover. You gotta love his passionate about Bitcoin. I have put options on a variety of different positions. I generally sell those when I see premium that gets inflated and gives me some opportunities that, I'll take that. I'm not going to say low risk, but lower risk opportunity on some stocks. Trading AMC and GameStop, that is a bit risky. Look at what you can sell AMC calls for a month out at 145. Wait, AMC calls for 145? I haven't looked at that. I didn't even look at selling calls because I'm planning on owning this one, but let me bring up AMC. Is it really that? Is it crazy? Let me see. Here's AMC calls. You want to go a month out, so here's the July 16th, the 145. Yeah, you could still get some money for it. I would sell it closer to just locking more premium, but yeah, 145s, you get 15 cents. You get 15 bucks on those. Meh. And that is a monthly, though. So not great. No, I don't want that. All right, so Riley, that's what I do. I try again. I'm usually not very vocal about the things that I'm in because I have this. I'm almost. I'm not a superstitious person. There's only one superstition that I am staunchly a supporter of. When I lived in Italy, you guys will hate me for this one, but I'll share it with you. In Italy, my friends over there, there's all kinds of traditions and unique things that they go by. But my friends were very superstitious about this one thing when you were drinking with another person. And it's this. I've got a glass of nice Colonel Taylor whiskey right here. And if you had a alcoholic beverage and were to cheers me, I would clank my glass, say cheers, prost, skol, nastrovia, chin chin, lahayim, whatever you want, nastrovia, you name it. Cheers. Enjoy. If you had a soda or a glass of water or something without alcohol in it, you will never catch me tapping my glass to yours because the Italians believe that if you cheers an alcoholic beverage with a non-alcoholic beverage, it's 7 years of bad sex. Now, I'm not superstitious really at all, but there's some things I just don't want to take the risk on going forward. So, anyway, decided to throw that one out there for you. Maybe change your celebration and toasting over the weekend. Some of you are going, well, that's what's happened. It's been 6 years. I'm almost done. Oh, sorry. I know I'm a clown sometimes. Hey, it is what it is. All right, last one here. I think that this is actually kind of important because it's what's going on right now, and it actually is getting a lot of fanfare, especially with what's going on with the Colonial Pipeline thing. Brad says, yesterday he said something about the G7. What is that? The G7 is just simply some of the largest economies in the world. It's Canada, France, Germany, Italy, Japan, the UK, and the US. And basically what they do is they get together and talk about issues, right? What's going on? It's like a bunch of CEOs of major companies getting together and saying, hey, what are your problems? What do we need to see? Is there something on the horizon? What can we fix? Hey, how can we rule the world together? That type of thing. Right now, one of the topics is going to be Bitcoin, in particular Bitcoin, because of the hacking ransomware type discussion that's going on. But I'm curious to see what the talk track is on it going forward because of what happened with El Salvador. So, that's happening, and it's going to be a couple-day thing. We'll see what ultimately happens from that. But that's all the G7 is, Brad. It's just basically the major players in the world. There were other G organization groups, but the 7 is kind of one of the major ones out there. Okay. What other questions you guys have for me? What else? We're at 39. I might end up early. I definitely have to stop early today because I got to go I have an eye appointment. This eye is still bugging me. What's your preferred way to buy physical gold? Harrison asks. Good question. I'm a coin guy, so I go down to the numismatist, I believe that's how you pronounce it, and I'll go and buy gold coins. I like having a coin, something I can hold. I'm not quite a baller. I'm not buying bars of gold, but that's how I would do it. I would say when you're looking at a coin dealer, shop around because there's some bad ones out there that are just scammers. I had a chance to work with and interview many times the guys from Rare Coin Wholesalers. Paul Busby, I met him at a trade show once, and he was one of the only guys that I met at this trade show that was saying, my recommendation to clients right now, sell gold. And I couldn't believe he was saying this. Like, you're in the gold business. He goes, yeah, but we're traders also. And he goes, right now, all signs are pointing to selling gold. Everybody else there was saying, buy gold, buy gold, buy gold, because they could drive prices up. So if you're buying physical, you can do it that way. There are also some that I have not dealt with. I know Brendan probably has some experience with this, where you can have digital custody, meaning you can buy physical gold through companies, and then they'll give you almost like a blockchain type of address, and you can check in and literally see your bars of gold sitting in a vault somewhere. I don't trust that. If I'm not holding it, I really don't. It's like my private key, right? I know that there's Bitcoin at this address, and I know, or actually this one there's not, but if there was, I know I hold it. It's in my possession, not anybody else's. So I like to hold the coins, the bars, whatever. So I don't like letting anybody else have custody of it. So physical gold is the way I would go, and I like gold coins because they're divisibility and they're in smaller chunks, and you might actually get something that has some rarity to it. I don't see too many rare gold bars. So that's my preferred way to buy it. Let's see. Market outlook. Yes, I got to do that. Fink's like, dude, just stop talking and just go over your 7 markets. All right, let's do it. Just before I forget, because you know me, I will go on a tangent and I'll forget and be like, all right, I got to go. All right, here's your week. So I'm going to start at the bottom. Gold finishing the day down 0.89%. This is also including the futures, so it's going to be a little bit different than the numbers you're going to read on CNBC. Look at this from a technical perspective on the daily. Gold, I still am bullish on gold. Today's trading action doesn't make me feel very confident. But again, if we tweak these lines, and we've got all kinds of lines drawn here. Let me see if I can redo these for you guys. Take that snap mode off. This is not the best way to be drawing this either. I do it for general context, okay? Some of you guys are going to get me a hard time for, you didn't go through the tops of the tails, etc. Let's see here. I like to go through the bodies. So bottom line is the picture looks relatively similar. You're seeing kind of a pinching pattern. Some will call that a symmetrical triangle. Some will call that a pennant formation. Either way, what it usually reflects, and I say usually because, it doesn't always mean this, it usually means it's just consolidation before the next move up in the trend. So gold, I like gold from the bullishness perspective. Keep your eye on it early next week, because if this does break through some of these lows, then we'll probably come back down and retest, 1800 mark. But all in all, it does look good for gold. I don't like the speed at which these 2 red candles have formed. It tells me that there's a bit of, as soon as this thing does show weakness, there's a lot of fear pushing that thing down, as we saw today. All right, next up is the 10-year. Now, this thing has been on fire lately simply because those yields are dropping, and I can show you actually, I showed you already the yield on TradingView, which I can show you guys again. This obviously is very bullish for the housing market, right? Prices dropping on the 10-year means that those 30-year fixed mortgages are going to be dropping again, which is great. Not out of the woods yet. I still do think we're going to see higher interest rates, but it's nice to see this reprieve here. It's giving anybody who's long that 10-year and 30-year Treasury a good opportunity from the bullish perspective. All in all, I am still bullish on the yields moving higher, but just not right now. Got a little pullback. Let's see, S&P 500. This is probably the more important story of the week, is the lackluster performance of the S&P. It struggled this week, but it ended on a real strong note. I mean, we ended at all-time highs in the S&P 500. All-time highs. That's a great thing to have happen. We reached above that high we established on the 10th of May, right? We broke that yesterday, but we didn't close above it. Today we did. So it's pretty much closing at all-time highs. S&P is looking very strong, looks great. You got to stay bullish on this thing until proven wrong. So still bullish on the S&P, looking good. NASDAQ, similar situation, but it's not quite there. I will be watching this one closer next week because I may end up doing some shorting on the NASDAQ. I'll have to wait and see how it pans out when the futures markets open on Sunday night. But right now, you're basically bouncing off that 14,000 mark on the NQs. Looks good, still strong, but you're coming into some big overhead supply, so that makes me a little nervous if I'm thinking about going long NASDAQ. I'm actually looking more towards a short here, but I have to wait for confirmation. Crude oil comes in third today. Again, just following that breakout, right? We talked about that breakout above 66.80, right around $67, and all of a sudden, just kept on running, to be expected. One question maybe, where do you see it going to? Well, there's a couple different metrics for that. Generally, what people will do is say from the top, or from the bottom of the triangle to the top, we'll give you a measuring object, which means, give me a second here to draw all this out for everybody. Pull this down. It's basically saying that the potential target here for crude oil should be somewhere right around $76. Now, if we take this off of my drag mode and go into weekly, 76 doesn't really give me anything exciting from a supply perspective at all, but that could give you a nice target for it. I do think you'll see this thing hit that 72 mark very quickly. As you can see, that was the origin of this really big sell-off that started on January 10th of 2020. All right. Moving up the list to number 2, Russell 2000, getting back in vogue. We've seen a beautiful weekly chart. The daily as well looks pretty darn good because it's getting back near the top. But that yellow box, which we've had drawn, you can see it's been 2 weeks since I moved it. Let's move that box back over here. All right, we're still stuck in this sideways range. Granted, we're at the top. So for you spread traders, there's opportunity. There's opportunity in it, but the big moves for me need to be waited on. Wait for it to break out of this one way or another. That's your Russell for the week. And lastly, I guess licking its wounds, coming up a little bit today was Bitcoin. Right now at 37, 1,070. still holding. You know, it hasn't broken below 30,000, which is great. You know, I don't really want to see it break below 30,000 because there are two big unfilled gaps on this one that go way down. But starting to stabilize, and I personally do think that this news with El Salvador, as small as El Salvador is, it's a watershed moment for the cryptocurrency, for Bitcoin, and the whole ecosystem. And if we can see more countries, you're hearing a lot of different names throw their name around saying, hey, you know, Iran's thinking about it, or this country, that country. A lot more countries, I think, are going to jump on board. And if we look at what my argument was in the video that I did, I think I did it in 2020, like in February. Like, I think I did a video called Why Bitcoin Will Be $100,000 by 2023. And I mean that by January 1st, 2023, not the end of the year. I think that one of my main arguments was adoption of Bitcoin and digital assets around the world. And when you look at what El Salvador did, from an adoption perspective, it just spiked the adoption prospects. And if more countries do that, then especially with Bitcoin, then you'll see this price get much, much higher because of that adoption rate. All right, I went on a long ramble there. When is your new crypto course? Crypto course should be ready. My fingers crossed. I'm working timeless hours on this thing. It's driving me crazy, but I should have it done. Mid-July is my target for it. OTA has been shooting for August, but I'm shooting for mid-July. If I can, I always like to try to finish things early, but I don't want to make it early for the sake of quality. I want to make quality good, so we'll hopefully have that done mid-July. What if the U.S. converts to crypto to remove circulation and they time the bottom? Well, first off, and this is an interesting one. For those that believe that cryptocurrency will completely replace the US dollar, when I say cryptocurrency, I mean a non-government controlled currency like Bitcoin, Ethereum, Litecoin, Ripple, Dogecoin, whatever. It's not going to happen, right? You're not going to have the government willingly lose their monopoly on controlling and printing money. They'll do something to combat that. Can they run side by side? Possibly. But don't think that the dollar is going to just disappear. Yes, in the next 1,000 years, the dollar will disappear. It'll be something else because fiat currencies fail over time. But for most of our lifetimes, just not going to happen. So don't get too excited about Bitcoin or Dogecoin replacing the U.S. dollar. It may do it in other countries, but not for the U.S. These major world powers like the European Union, you look at the UK, they can't have a country like theirs without fiat currency. That's how they grow the economy, is with fake money. When you have Bitcoin, it's real money. So you no longer can support wars. You can no longer support certain amounts of development. Infrastructure projects get changed. That debt clock that we can look at anytime, just go to, I think it's called debtclock.org. You can see it's constantly growing. Why? Because we're a giant economy. And if we tried to run the economy without printing more money, we wouldn't be able to sustain the growth that we have in the U.S., unfortunately. And it's not just the United States. It's pretty much every country around the world. And I agree with Shinobi. They are scared of crypto. I think that the governments are scared of crypto, absolutely. We will have a digital currency in the United States. I believe you go 5-10 years. No doubt we will all have a digital dollar, but that's not the same thing as Bitcoin. We can do a show on the differences and what the impacts are going forward on that one. What was that? I saw Nano Ledger X en route here for my birthday. Yes, cool. There's another one too. There's a Nano Ledger XS, I think, that has some kind of cool Bluetooth interface. But now all of a sudden you're connecting to the internet, so you make it a hot one. If Merlin goes over an hour and Big Eb is not here, did he really go over? What is it, Schrodinger's TraderMerlin? I'm not going over an hour today because I got to get to the doctor. Eye doctor. Can they not peg crypto to the USD? They do. Those are called stable coins. And there's a whole bunch of them where they're pegged to. You can use. There's Tether. There's USDC. There's a bunch. There's the Gemini dollar. These are crypto assets that are pegged to the US dollar. And again, they'll have those for a lot of other markets. And what makes those so special is if you saw this crypto market crash coming, or just thought we were a little frothy, a little too overdone, you can always move to like Tether or USDC and stay in a stable coin, which is going to be pegged to the US dollar. So as the crypto markets just plummeted, these guys stayed at a value of 1, roughly. That's pretty good. Yes, DeFi is killing the banking system too. It's sad. I pull almost all my money is out of the bank now. I have just enough as an emergency fund in my bank. Other than that, I'm pulling everything out. And why not? Why shouldn't I be able to go, instead of making 0.1% at my bank, making 12% yield or 5% yield or 6%, make something on my money as opposed to let it sit there? I mean, everywhere I'm setting my digital assets, I'm making more than inflation, or at least the stated inflation rate. All right, I didn't write out the things that are happening for Monday. Sorry, I just didn't have time today. We have, for Monday on the earnings front, there's really nothing going on. On the economic calendar, there are a couple of things happening for Monday. Most of it's outside the U.S. It's like unemployment rate for the British pound. I believe Canada has some manufacturing sales numbers, but nothing going on for the U.S. for Monday's show. All right. Voyager's giving 9%. I think, Brendan, correct me if I'm wrong, but I think that Celsius is giving 10%, right? 10%. It's crazy. Unbelievable. Just give 10% for me to park a digital dollar at these locations. And it's because they're lending it out. They're doing what the banks are doing, but now I get rewarded for the action. DeFi is absolutely changing the world, and that will be a big piece of one of the one aspect of the digital asset course that I'm building for Online Trading Academy. Cool. That's going to do it for me, guys. I need to get on the road here and go get my eye fixed or checked out. If you have any questions, comments, feedback, again, I want to thank those that sent in questions. Kevin, for all your content and contributions you always do. Riley, Miles, Brad, Pepe as well, Sarah, and Don. Thank you guys so much for your feedback, your questions. If you guys have something you want me to address or go over, send it on in at TraderMerlin@gmail.com. I'm happy to go over pretty much anything that I can on the program, but sometimes if I can't get to it, I'll postpone it till I get a guest. Like Les has been asking about some spread option strategies, which not really my area of strength. I'm not going to claim it is. I will defer that to somebody who's got the insights to get that question. Hopefully next week there, Les, for that one. All right, everybody, that's going to do it for me. Have a fantastic weekend. Do something fun. Don't forget, we do have our challenge still going on. I dropped the ball yesterday. I did drop the ball yesterday. I forgot to do my 100 push-ups, so I will do 200 today to make up for that. Even though I normally take Friday off, I'll catch up. But hopefully Catherine, Jerry, Thomasina, Alan, Brendan, Sue, Leslie, Tom, Kevin, Les, and Simon, get your June challenge stuff done. Have a fantastic weekend, everybody. Go out and do something fun. I will see you all on Monday. Take care.